Good day, shrewd traders. This is Gary Ender with another free market update. We're looking at the S&P 500 right now on a daily chart. We have a 10-period moving average on this chart. We have Bollinger Bands that are 20 and 2, or 2 standard deviations from a 20-period simple moving average. We have volume on the bottom, and this white line is a 30-period moving average of the volume. I should start out by saying that the S&P 500 is still in a bearish mode by way of the STM or the shrewd trading model, but this consolidation has been edging the STM more towards the neutral bias. We see a move down, and now we see a sideways consolidation. I've been talking about this sideways consolidation now for a while, and I was suggesting that no matter what you're doing during this consolidation, if we get a break above the top of this consolidation, if you're playing indexes or if you're playing sectors, you'll want to be on the long side of the market if we break towards the upside. If we break on the downside, you certainly want to be on the short side. Now this pattern of this consolidation is really complicated itself, where when it started out it looked like a down move and a consolidation or a continuation pattern, meaning that it's going to consolidate, rest for a little while before it breaks to the downside. Now you could argue that we have a bit of a left shoulder ahead and we're developing a right shoulder. That could be one possibility. But in either case, if it breaks from a head and shoulders bottom like this, or from the rectangle that it's in, you're going to measure it the same way. We're going to use the height of this pattern to measure to the top side, and we're going to have some resistance right in this area here, and then the next real resistance is way up in here. So if we measure the height of this, we're going to take ourselves probably up towards this recent high that we see. Now what's complicated things even more is we've got a consolidation in a consolidation. We see for the last 5 consecutive days this market's going absolutely nowhere. We've got a Fed meeting next week. We've got data coming out a little bit later today. We've got an election for Greece this weekend. And I guess traders are all waiting to see what's going to happen. In the meantime, the consolidation just gets tighter and tighter. And for the most part, I think the black box trading, the algorithm, the computerized trading has basically taken over. So now if we break out the bottom of this smaller rectangle, then we'd probably be looking for the lower Bollinger Band. And again, if we break out of the top side, we'd be looking for that same measurement that we talked just a few minutes ago. We can also put Fibonacci retracement on this chart, and we see the 38, the 50, and the 62% retracement here. Price is basically stuck at the 38% retracement, but we see the highs have almost reached this 50% retracement. We also have the upper Bollinger Band as a potential resistance point as well. So hopefully this makes a decision somewhat soon. If you've experienced some trouble making profit over the last 4 or 5 days, well, you're not alone, because other than a very short-term day trader, this takes away a lot of our profit potential. Finally, we can also see that price is being held by this 10-period moving average, which is oftentimes a support or resistance point. We just want to make sure on these breaks that we're watching this very closely, because you want to stay on the right side of the trade, and that's what the STM or the shrewd trading model is all about. This is Gary Ender. I'll be back with a shrewd trading free market update very soon.